we're going to look at this as a strategy from the information we received this morning on the initial balance, and that pertains obviously to the Bund. And I'm just going to get that chart up for you guys quickly. So this morning we were chatting actually in our morning prep, and we were talking about hopefully getting a tight IB, and the ideal scenario being that the market pushed up into this area, and that's where we were going to be looking for passive entries. We didn't get that. While I was talking through the stream, we actually got the market started to feel very weak in the pre-cash session, and we'll look at the 5-minute structure as well, which didn't look great, even for a pop higher. Probably looked better just for the market to open and offer, but it came early and the futures broke it. And I've seen this a few times. For me, there's quite a few strategies around this, and one of them is if the futures breaks it and comes back inside, and then that's kind of where even on the futures, that's kind of where you can take some risk, because so many of the examples that I've seen, cash opens, might have a stab down, and then once it returns in, you often get these phenomenal squeezes back inside. As I was speaking to Alex Hayward, he was telling me, it normally comes with a tight 1-minute consolidation, and then you get the squeeze. That didn't quite happen today, and we'll look through the charts a bit later. But once you got this wide IB, it definitely suggested that your strategies employed today, probably you wanted to be sitting on the extremes. You didn't want to be getting involved mid-range in the volatility, especially in the early morning. You wanted to be looking to pick up long on the extremes, tight risk, and you wanted to maybe be looking to fade the extremes on the other side. And obviously, once the market had kind of put in structure, it doesn't mean that fading this level now is the right strategy. That might have been the right strategy in the morning if we opened and bid up and to fade this level, but heading a bit later into the session, once it had been rejected off this level, came down and then got picked up again and poked back, it kind of really felt like it wanted to push higher. And if you look at the weeklies, you have this really smooth profile already from on the week, and then if we combine today with that, this profile looks very balanced to me, to the downside now. This low is not great, but I think if you look at this empty space cave area that we've got in here, if you kind of look at this heavy on the top, it kind of suggests that the fact that the market failed, to push lower and hold lower today on that fundamental shift we got from the Fed, for me it's kind of suggesting like it's going to be a balanced week, and we might start to explore this area going forward. So that's just looking at the weeklies, and then if we pull up the 5 minutes, so obviously this morning we got the gap lower, and then it kind of failed to offer, and it was putting in this we had this kind of this flag structure. So it did look quite bearish, and I think just wasn't expecting it to fail so soon, and then you got this big surge in volume that came in. That's a really big 15,000 on 5-minute candle in pre-cash is a really big amount of volume to come in, and so that came in, slammed it, and then that changed everything for me. So now, once that had happened, I didn't want to be too involved. Yes, scalping's good, but you could feel there was that volatility washing up, washing down. So for me, it just became more about waiting for that timing. And we were speaking about the 70, 77, 76s level that was holding into that auction. So the auction came in. The Spanish and the French auctions came in. So the Spanish came in at around here, and if you've seen enough of them and you've seen some price action, I did start to feel like this was a good spot to get short passively around this area, preempting the auction. I've seen enough patterns to know that the offer on these auctions can be good if the structure is also quite bearish. But then when it got into this tight range, and I was watching on the footprint, a lot of it was being absorbed. And we spoke about that 77, 78s, and then after the release of the French auction results, you got, it tried to offer, and then this guy that was sitting there and at 77, 78, lapping it all up, and then you got this really nice sort of relief rally out of that auction. Then we spoke a bit later about, because of him having taken so much at this level, if the market offered down on good volume, that very likely that he was going to pay down, and that you could see a good splash through that level, and that is what you got. And then it just became about being really alert in this area. To the failure of the offer. I did think we might poke through here, but you could feel it really dried up. Once we had that intention, if you remembered what that looked like, we had a little bit in here, and then it just completely dried up. So, waiting for that, and then to try and get long of this wee 5-minute structure around here offered great risk reward, to a hold of the other side of the IB, and the profile was looking really nice for that setup. We just look at it from there. So this is how the profile looked before. Then we got the breakdown into here. This for me, it's a very balanced profile. The failure here, you knew with a very high probability that once the market came back inside range, the previous day's range, and the offer had kind of dried up, that the chances of testing to the other side of the IB high are extremely high. It's a probabilities game, and when you can get position here with a very tight risk for such a big asymmetric risk reward trade, you have to take those kind of trades. And so that moves me on to the footprint that a few of you guys we were talking about. So I'm not going to go into depth about how it works, because there's a lot of YouTube videos and we don't have that kind of time. But just very simply, let's just take this price. If you see where my mouse is here, assume I am a seller and I am the guy who came in, that price is 74s, and I offer 288 lots into 74s, so into the bid of 74s. That is how it will appear. So it's kind of once you get your head around it, it's very easy to understand. But I'm the seller, and that hits the bid. So it kind of shows when that happens, and then it goes bid over. So now the buyer is now hitting 538 into the offer, and that's where you see the 538. And this is kind of what you want to see on the lows. You want to see someone hitting into the bid, and then it goes. Someone comes and hits the offer, lifts the offer. So that's that would be considered a good, or a good low for just for the purpose of what I'm saying. When you get an auctioned area like that where it's gone offered, and then you've had a transaction coming through on the other side, that we don't say that's as good of a low, but they can be left. So we won't get into too much about that. But basically, what I wanted to show you guys was, so this is the auction, the start of the auction, and this was kind of into the Spanish and then the French. So what was clear is, look how much volume. So we had 22,000 in this rotation here. Then we had 30,000 in here, and then we had 13. So that you can feel this is, and you could see on the ladder, if you've seen enough of them, that this is the price action you see in auctions, and you can see a lot of volume being done. So I was short when I saw all this going through here. Kind of felt like a lot of volume. When it started to offer down, I started to position 84s. Okay, and then we came down, and I could just feel someone, I was wanting those 78s to break, and just every time break, but then it would come up. So if you see here how much he's actually taken, you've got in this little zone here alone, you've got over 10,000. In this whole rotation, you've got 22. Then the next rotation opened, and he held it. He held it here and started to absorb higher up. Then the market actually offered through him, and that's actually what you want to see. Offered through him, and it got picked up again. Someone kept selling into him, and this is the important one here, where someone's now sold. So there's a lot of sellers into this area, and now it's actually gone bid, and there's an imbalance. It's now there's someone's lifted into the bid more than what was below here. So now that we call this an imbalance, once it's almost like the sellers are trapped, and that was your clue just after the auction results. That gave you the trigger. So if you didn't want to preempt it, once it went bid 78, 79s, and he was still there, you can get long there with a very tight risk. Just below, once you'd had this rotation, your risk is 2-3 ticks below there, and you're looking for a nice relief move, whatever, until you kind of feel like it stalls out. So that was the one trade we talked about a little bit, and this is kind of what I was looking at, these heavy volumes going through, but this guy holding, you could see it on the ladder, and then this was the footprint signal once it kind of put that imbalance in. Sellers trapped down below here now, and now someone's actually paying up. They're going to the market to get their business done. So that was a really good one. And then to note, once you see a level like that, you put a line. So there's 78s, and that's what we were talking about on the chat. Is 78 is now a critical level. If it gets taken, there's a very good chance people start to pay down. And that's kind of what you saw here when it offered through that level. You've got these kind of thin areas on. You've got these thin areas here, which means that people are paying down, and so that was the move down that we talked about. So we were looking at that volume ledge at the 77s, and when it broke, we were paying attention for a continuation move, and then perhaps a failure, or a failure without taking out the lows. And that's kind of what you started to see here. You can see just on the footprint, so someone hit 1,000 into the bid, and we actually went offered, so not a great low. And then what we got here is then we had people starting to absorb at higher prices, and then the real intent started to pick up above the 74s, and then you started to kind of get your rotation all the way. And once we had kind of got back above those 77s, 78s, then they started to hold as as support, and then the market really got into its kind of squeezing mode. And you can see by some of these thin areas, these are shorts just paying up, these kind of thin areas on the side. But what I do suggest is you go and watch a footprint video, because I don't have the kind of time, and I'm not as adept with it as maybe some guys on the market delta in explaining. But you really got your squeeze move and your rotation higher, and all the way above the IB high. So I think it was a really good, for me it was the trade of the day. And if you were alert to the failure here, you could really define your risk tight, and then of course you can take some out. When you feel like, it's not to say you run your full size position to the other side, but it is what I would like to say is that it's very probable. So there's a huge probability that we're going to go and trade out this side of the market. So I think that was definitely the trade of the day, and now we are we're starting to put some TPO structure in here. So tomorrow it'll be interesting if we can start to auction out this kind of cave area that was left between Wednesday and Thursday, Tuesday and Wednesday. Can we start to get into here, auction out, and then maybe challenge this ledge at 33s?